Market conditions bearish in this overall bull market. We're seeing a little bit of strength here this morning on S&P 500 futures. That's a point, almost up 1%, 0.8 of 1% here. We're seeing majority bullish at 10 and 4 on the daily trend condition of SPY. Let's actually jump over to SPX. ES1 is the futures contract. SPX is the S&P index. They should look very, very similar. We're just not going to see pre-market. You can see that pre-market move is moving that bullish bearish indicator a little bit higher, whereas it closed out at 8 and 6. Majority bearish still on the 1 hour time frame, but we are sitting inside of one of these demand block zone locations where we could see a bit of a bounce. We're certainly oversold aggressively to the downside. The number of stocks above the 50-day moving average in the S&P 500 sitting at 19.28. So 20% of stocks in the S&P 500 above the 20-day moving average, which means that 80% are below. Okay, so we've got an overall bearish condition on breadth, meaning the participation of the number of stocks involved in the overall uptrend or downtrend. Most are starting to trend down now. We're seeing VIX, which is volatility, have some kind of a little quiet pause right here, a really compressed, tight state on the 60-minute, on this 1 hour time frame of volatility. You can see how this trend is very compressed versus here where it's really wide. So we're typically looking for that rhythm. We're looking for that expansion, and we're looking for that contraction. These become decision points. At this point, we're either, we're typically going to be doing something here, and we're going to be doing something here, or in this case, the volatility is going to be doing something. Those can be decision points, locations to be aware of. And we're also getting that really compressed state here on volatility for the daily time frame as well. So markets, it could be a coiled spring here on volatility. We'll see how that pans out over the next few days. But that overall breadth, it's low enough now that we're reaching these oversold areas. Okay, you can see where that has been at before over the last couple of years. And so we could get down. We can test that 10 range. So we've got a little bit potential to the downside. We've broken some support on breadth, but we are at a range where we could see it's oversold enough that it has had areas of bounce at or near these locations before. And we'll see if new demand really comes into the markets this year. Let's look at bonds. That overall trend, that downtrend in bonds is still in play. This is SHY, which is the short end of the yield curve, 1 to 3 year treasuries in this retracement. Majority bearish at 12, but you can see the 1 hour time frame, the shorter time frame, gaining some strength back here at 11 and 3, and could see some strength here in bonds at these levels just because of the oversold range and location of these at this point. We're seeing the U.S. Treasury, 10-year Treasury sitting at 4.52 in this overall uptrend here as well. And again, that should be typically exactly opposite of what we're seeing in the price of bonds. These are not going to correlate exactly because this is the 20-year, this is the 10-year, but the point being that when interest rates are moving higher, bond prices are moving lower. So when we're looking at this bond price moving down, that's telling us that interest rates are still on the rise, and that's still concerning for the economy based on where we've been, based on the yield curve currently as well. We are seeing that yield curve continue to strengthen here, which is ultimately what we want to see, but that inversion of that yield curve, which is anything below this yellow line right here, has taken place. And typically we do see some of that spill over into the economy within 12 to 18 months. We'll see if the markets start to get a whiff of something there that they don't like either. Let's jump down and take a look at the Dow Jones Industrial Average, the DIA trend, which is softening here as well. This overall trend location all the way back down to that low that we had about a year and a half ago, pulling back to that 236 location. If we go in just a little bit tighter and look at really the last 6 months of trend, we're also seeing some potential support areas where it's been at before, this 50% retracement zone inside of that 382-618 box. This block of Fibonacci ranges is a corrective zone where typically of that trend location start to find some kind of demand, whether it's a bounce and then there's more downside, or a bounce and it continues the trend higher. These these areas can be an area to see additional demand start to come in. We've got weakness on triple Qs, the 1 hour time frame majority bearish at 14. So getting some acceleration to the downside, but we are also sitting right at that demand area, some support right at 236, 9 and 5 on the trend for triple Qs. The Russell 2000 also showing weakness here, majority bearish on Russell 2000 at 10 and 4. That trend is weakening and continuing to accelerate to the downside on. So that's Russell 2000. That's just small caps. USO finding some strength here. Looks like it's going to gap up a little bit. 76.40. Majority bullish at 14, and the 1 hour time frame also seeing some strength. Gold at 8 and 6, majority bullish but relatively flat. That also shows up really on the price trend, just inside of that corrective zone now of this trend, and trying to gain some strength here in the 1 hour. You can see there's a little attempt at rally here, a little attempt at rally here, and in this overall long-term bullish trend, long-term meaning the last 6 months, seeing that uptrend retracing into that corrective zone, and watching to see if we do get any acceleration on gold. Silver, similar type price pattern. Let's jump over and look at a couple stock ideas today. One is GILT, nice confirmation bar here. I shouldn't say nice, it is a confirmation bar. The nicer the confirmation bar is on the next chart here that we'll look at, and that is when you have just a real solid closing towards the high of the day. But this is in that overall uptrend, moving back into that bullish zone inside momentum. That symbol is GILT. The other one I wanted to look at here was NEXT, and that does have a real solid confirmation bar here. Nice volume increase in that momentum zone after a pullback, finding that demand, trying to accelerate and push that trade back to the upside, and gathering some momentum here. And we have on the 1 hour time frame that compression of trend that is starting to expand here. You can see that this is essentially that entire bar. Looking at that bar on a 1 hour time frame. So we're getting some motion there on NEXT. That'll do it for today's update. Everyone have a fantastic day.